In our first story this afternoon, the country will not be able to use cheap hydro power sources to expand its capacity to support its rural electrification program. The nation got to this status after recording higher demand for power in the last few years. This situation has compelled the Energy Commission to press on government to fast-track implementation of energy conservation initiatives for the country. Speaking to Joy Business, Director of Energy Efficiency and Climate Change at the Energy Commission, Kofi Ejako, said the growing demand is worrying and could affect the country economically.
Now Ghana has hit its wit's end as far as cheap hydropower is concerned. Now, any future expansion of generation capacity will have to come from thermal. And thermal is expensive. You understand? Thermal is expensive. That is how come sometimes we struggle to adjust tariffs upwards, and it comes with a whole lot of resistance. Thermal is expensive by way of the crude oil that we use as feedstock. It is expensive also by way of maintenance. It is expensive by way of the carbon dioxide that it emits into the atmosphere. So, if the trend is not checked and demand for power continues to grow, then we as a people will have no alternative than to cough money to increase generation, expand generation capacity. That is building more power plants. And that money, you know much as I do, that can be applied to certain sensitive sectors of the economy that will bring prosperity to all of us.
While still on power issues, work on the 19.4 megawatt peak solar project at Kalio and Laura, both in the Upper West region, are going on steadily and expected to be completed before the end of the year. The two projects, when completed, will generate enough energy to power some 32,000 households and increase the geographic spread of power generation in the country. Chief Executive Officer of the Volta River Authority, Emmanuel Inchidako, who disclosed this to the media after a tour of the two projects, was with Rafiq Salam, who filed this report.
President Akufo-Addo in February card sought for the construction of 17 megawatt peak solar projects at Keleu and Laura, both in the Upper West region. The two projects are being funded by the German Government Development Bank, KfW, at a cost of 22.8 million euros. Ever since the sword was cut, contractors working on the two projects, Elecno, have never looked back and has been working to ensure that they do not only meet the deadline but deliver quality work as well. Project manager of Volta River Authority, Engineer Isaac Badu, threw more light on the two solar projects.
Originally, we were doing 4 megawatts here in Laura and 13 megawatts in Kalio. Because of some improvements that we have come up with, the capacity here has increased at no additional cost. So from 4 megawatts, we are doing 6.5 megawatts here. So come end of this month of October, when we commission, we'll be commissioning 6.5 megawatts capacity.
The projects, when completed, will generate enough energy to power some 32,000 households and increase the geographic spread of power generation in the country. Chief Executive Officer of the Volta River Authority, Emmanuel Inchidako, who toured the sites to acquaint himself of the progress of work, was impressed of the work done so far.
My impression is that the project has been well executed from the design phase right up to construction. I think it's a good project. I see there's great attention to detail as far as the operational practices and the construction practices are concerned. So I think all in all, I think I'd give the contractor a lot of congratulations for doing a good job. But as I said, we have slipped, and it's through no fault of anyone. It's just the COVID pandemic that has caused the slippage.
He is hopeful that both projects will be completed before the end of the year 2020.
I have no doubt in my mind that we can hand over. I mean, they are looking at handing over in November. I think that from the little that I've seen and the initial briefing that they gave us, I think we can do a couple of weeks earlier. And so we are going to sit with them, we'll decide with them how we can be more aggressive with the timeline. And I'm hopeful that we'll be able to do the handover before November.
Though the two projects are yet to be completed, Managing Director of the Northern Electricity Distribution Company, NEDCO, Osman Alodiba Ayuba, is already upbeat and speaking about the benefit his output will derive from the peak solar projects.
Once VRA puts it in place, it is for NEDCO to now take over as a marketer and now distribute it to the consumers. And so for us, it means a lot for us because you know our electricity supply is not very, very stable in recent times. And so it is another source of power generation for us. So it comes to augment whatever power supply we have to make to the people. And once the chief has said that one has been done at Navrongo and lessons have been learned, and this has become more efficient. What it means is that we may be able to get it at a cheaper cost than we were getting for Navrongo. And so that will also translate into we getting it to the consumers at a lesser cost.
Reporting for Joy News, Rafik Salam, Laura.
Now, payment of funds locked up with liquidated investment firms will be done through cash and a mutual fund instrument. This is coming ahead of the planned payment set to begin from the last week of September this year by the Registrar General, Jemima Ware. Director General of the Securities and Exchange Commission, Reverend Daniel Ogbamitete, disclosed on PM Express Business Edition what a bailout from government would entail.
Government come in and provide a bailout for these investors or these clients of these affected companies. Initially, we government told us, okay, they'll give a capped amount, but over time and through engagement, the government has agreed to provide the bailout based on the validated claims of these clients. So this is, if you like, a social intervention that government has decided to do, because typically,
whilst you wait for the assets to be validated and be sold, let me use the layman since I have a lawyer here, to sell the assets of these companies.
Well, so actually the way the bailout is going to work out, once government comes in, the clients don't even have to be worried about engaging the official liquidator for any process, because government is coming to say, if this is your validated claim, we are providing you the bailout. So the government will have to then deal with official liquidator in terms of whatever recoveries she would make from the assets she may find. Okay, so what government is doing is very good, because it's effectively stepping in to make these affected
whilst you wait for
investors whole.
But Reverend, some would say that clearly from the Bank of Ghana experience, it was clear that this liquidation process would take quite a while to pay these people right.
So that's why I said that we are working with our act in Act 9.
I'm sorry if I threw in, because that is what fresh on our mind.
No, it's important, and I think people need to understand. In Act 929, we can appoint a receiver only where broker-dealer firms are concerned. We can't appoint a receiver where fund management companies are concerned. So the companies that we revoked their license were fund management companies. So the only legal option we had was to notify the Registrar General to say that, look, you gave these people a certificate to operate. We gave them a license. We've taken away the license. The object for which they came for the registration is no longer valid because we've taken our license. So please liquidate them. So that is the pathway, and I think that if you compare oranges and apples, you're making you're getting it wrong. Yeah. We are working within the laws
that guides your modus operandi or whatever.
Exactly, because that's my enabling act is Act 929, not Act 930. So I must work with Act 929 and follow the provisions in there. So the liquidation process is also another way, and that's why I'm saying that government is coming in, because it's a long process.
All right, you're watching The Marketplace. Now, Fitch Solutions, research arm of ratings agency Fitch, has revised the country's real gross domestic product growth to 1.96% for 2020. Earlier, it had projected a GDP growth of about 1.90%. Charles Nixon Yeboah is editor with Joy Business. He has been assessing this revision by Fitch. He joins me to elaborate, but we'll do that in a bit because we're having issues with his microphone. We'll fix that and get you an update on that story soonest. But EcoBank can be described as the top performing bank in most areas of operations for last year, 2019. That's the conclusion one may reach after going through the 2020 PricewaterhouseCoopers Banking Survey report. George Rafi has details.
Conclusion was based on some significant progress made by EcoBank in most areas of its operations for 2019. According to the PricewaterhouseCoopers report, EcoBank ended last year having had the highest industry deposits, accounting for about 13.4%. This was influenced by strong growth in digital channels that aided its mobilization for last year, with a deposit base of 10.92 billion Ghana cedis. In the area of total operating assets, EcoBank again emerged on top, growing by over 21% to 11.8 billion Ghana cedis, making it the number one in the industry among its peers. In 2019, more than 9.6 billion Ghana cedis was advanced to businesses. Out of this, EcoBank accounted for about 14.6%, making it an industry leader, while having the top spot in terms of operating assets. However, on the net interest margin, GCB might have been the best among the banks that had their efficiency and profit position reviewed. GT Bank was ranked as the first when it came to return on assets. Consolidated Bank came on top when you look at the average liquid funds in relation to total assets ratio. While Access Bank made some great strides in terms of recoveries, or came on top in terms of recoveries as compared to the amount of loans given out. The banking industry can be described as profitable despite recent challenges. As for the third year running since 2017, profits shot up by more than 30%.
So back to our earlier story about Fitch Solutions' projection of real GDP growth of 1.96% for this year. It had earlier projected 1.90%. And to elaborate further on this is Joy Business editor Charles Nixon Yeboah, who is gearing up for the weekend. It's good to have you in the studio,
Thank you very
Charles.
much,
So why the revision? What changed?
Well, Fitch basically is basing its argument on the fact that there will be some level of economic activities in the latter part of the year. We all know that the presidential and parliamentary elections is around the corner.
Right.
Unfortunately, there have been, the airport has been reopened. There is some level of port activities as well. So clearly, their argument is that economic activities would go up. And fortunately for us, we achieved a growth rate of 4.9% in the first quarter of the year. In the second quarter, it's likely that our economy will contract heavily. We might experience a negative growth rate in the second quarter of the year because there was some restriction. We almost spent close to a month at home for most employees or workers. So that's the argument. But if you look at the growth rate, it's one of the highest in the world, 1.96%. We will trail Ivory Coast and Uganda. Ivory Coast growth rate will hover around 2.6, whilst Uganda will be somewhere 2.13. So it will come as a good news for some businesses as well as government and household as well, in the sense that it will be able to give businesses some level of planning into the future. Clearly, it tells us that our growth will not be significantly hit. The last time we engaged Professor Peter Korte, he said he was cautiously optimistic that we'll achieve a 1.50 growth rate, but he decided to peg the GDP at that figure because he thought that we would, he didn't want to go beyond that figure, but he was also somehow optimistic that we might go to the 2% growth rate. So basically, the services sector might record some growth in certain areas. Even the hospitality sector might somehow recover along the line. We might also see some activities in the industrial sector. Unfortunately, the mining sector will not grow quite significantly. It might even contract, in the sense that we have not seen some level of production from the oil sector. Prices have also gone down. So in terms of production and earnings or revenue, it will not be that significant. But on a whole, it is good for the country, because 1.96 is not a bad
and that brings me to the next question, because it's interesting you mentioned that it is one of the highest worldwide. And so I was going to ask you how significant this is, and what does it say about our recovery from the COVID-19 pandemic?
Well, the authorities or the Ministry of Finance and the government have given a 3-year recovery program, but we might recover even quicker than anticipated, in the sense that if government forecast was 0.95 and some research organizations are forecasting more than that anticipated growth, some were in the region of 2%, then clearly it tells you that they are expecting some level of growth in certain subsectors of the economy. Right. We all know that we have 3 key sectors that we measure our growth: industry, agri, and services. And we have various subsectors under these sectors. And some of these subsectors will record some level of growth. Maybe the argument has to do with we growing quite substantially in the first quarter, which was quite shocking to many of us, because 4.9% growth rate in the first quarter was quite significant. It's likely the second quarter we might hit a negative growth rate based on the fact that there was virtually an economy that did not exist between April and greater part of May and somehow June.
Right. My last question is going to be related to mining, because you brought it up that we're not going to experience very significant growth. Is that what you said?
Absolutely, because if you look at the numbers, in the first quarter, mining recorded a growth rate of about 1.something%. Let me peg it at 1%. And clearly, if you look at the time where we have entered the epic period of COVID-19 pandemic, where prices of oil was plummeting and production had also gone down because there is less demand from the global economy, it tells you that the mining sector, which oil is a subsector, is not likely to grow as expected. But that to some extent will not be bad entirely, because in most cases we always bang our hopes on oil and mining growth.
Yeah, because Fish Solutions makes an interesting observation when it says that the country will enjoy high gold prices. We know what's happening with gold on the market, although crude oil prices have gone below its forecast price.
If you look at the basket, I would have to go back and check in terms of the calculation which subsector has the highest, higher measurement in terms of the basket. Then you'll be able to tell whether indeed there will be some significant level of impact on the mining sector. But the Statistical Service use mining as a subsector for both mining and oil. And don't forget that even in the mining sector, we have bauxite, manganese, and from all indications, we are not making earnings from these commodities, in the sense that demand have gone down, and oil, which is very huge, has also plummeted in terms of production and pricing.
All right, thanks very much indeed, Charles Dixon Awad there with that update on Fish Solutions' projection of a 1.96 real GDP growth for this year. Well, let's talk about something else. Let's talk about the stock market. We are going to preview activities for this week. I'm joined via Zoom by Bertha Atubiga, who's a stock market watcher. Great to see you, Bertha. And so there appears to have been little activity this week. Bertha, tell us.
Okay, so thank you very much, Daryl. This week has not been too impressive on the Ghana Stock Exchange. However, we've seen some equities adding up to investors' capital. And it was yesterday, and then we saw Standard Chartered Bank decline on Tuesday by quite a high margin, because it lost more than 1 cedi of its value on the stock market. And then we also saw Bank going up by 4 pesos at midweek. That was on Wednesday, to close at 68 pesos per share after trading 16,300 shares on the stock market. And we also saw Bank going up by 7 pesos, that's 1.03% on Wednesday as well, and it closed at 6 cedis, 85 pesos per share. Benzo Oil Palm Plantation declined yesterday, that was Thursday, by 14 pesos, quite a big margin, and it closed at 2 cedis, 11 pesos per share after trading only 1,200 shares on the stock market. Right from last week till date, it was only on Tuesday we saw the financial stock index actually decline on its index level in the year to date because of the decline we saw in Standard Chartered Bank on the stock market. It went down by 15 pesos or so. And then we haven't, apart from that, we haven't really seen any change in the financial stock, in the meaning that most of the, or all the financial stock, financial equities on the stock market haven't recorded any price changes in the last, let me say, 2 weeks, last week, this week, apart from Standard Chartered Bank. And then this week, we have seen Bank and Bank add on to investors' capital on the exchange. So the worth of the market began this week at 52.66 million Ghana cedis, and it's dropped further to 52.22 million Ghana cedis, and we've seen a further drop again because of the loss. We saw it go up on Wednesday, but on Thursday, it declined again because of the loss we recorded in Benzo Oil Palm Plantation on the market.
Well, Beth, I've got 2 questions for you. I hope we can do all of that in 2 minutes. Let's start with the first one. Despite all of this, people saying this is the best time to invest in the stock market. You agree?
Yes. It is absolutely right. It is the best time to invest on the Ghana Stock Exchange because, or invest in equities in general, because when prices are low, that is when you buy shares or you buy equities. And most of these prices, for instance, MTN is selling below its IPO price, and they are way low. Around last year, we saw FANMOC trading around 13 Ghana cedis per share. And as we speak now, FANMOC is 1 cedi, 4 pesos per share. So if you bought it at 13 cedis, you might have lost significantly. But this is a time that new investors who want to come on board can actually take advantage of these low prices that we're recording on the market to make very significant gains in the long term. Right. So it is the best time to invest.
Right. And, you heard Nixon and I talk about oil prices, gold prices. Let's turn to commodities because we've seen oil prices tumble this week on the market. What's the reason? What could be the impact?
Sure. Okay. Wednesday, we saw Brent crude oil actually fall below $40 per barrel. And that was the lowest that we've seen since June this year. And the reason is because what actually happened this week, what resulted in this decline that we saw on the market was because Saudi Arabia's state oil company, Aramco, cut its October official selling prices for its Arab light oil, and which is actually a sign of softening demand on the international market. And we've seen that in the short term, we're going to see the market looking very soft. The fundamentals in this with crude oil prices is going to be very soft.
Okay,
the recovery is a bit going to be fragile on the stock market, on the international market. Refining margins are going to be a bit low.
Sure.
And within this week as well, still on crude prices, U.S. Energy Information on Wednesday said they are cutting their 2020.
Sorry, Betha, we've got to go. I appreciate all that analysis. We've got to go. Thanks very much indeed. That's how we wrap it up on the marketplace. My name is Darryl Kwao. Up next is the election brief with Gifty and Pierre.